And we are live. Good afternoon, everyone. Today, we will be discussing the recent inflation data that was released this week and Jerome Powell's and the Federal Reserve's response to the higher than expected inflation data. Now, they want you to believe that the reason that inflation is running higher and hotter than they expected is because the economy's opening back up and there's a lot of demand and we're having supply bottlenecks. If you've been following me on this channel, I have been talking about inflation for well over 2 years on this channel and talking to you about why they are misrepresenting and they're just flat out lying about inflation. Inflation has always been a problem with our monetary system, with our economy. Now, the Fed wants to try to generate inflation at about 2% on an annual basis. And right now, inflation is running at about 5.4% if you look at the CPI, which goes back to June of last year, looks back 12 months prior. So currently, inflation has risen to 5.4% compared to last year at this time. The problem is that inflation doesn't really factor in housing and energy and food costs. So clearly, if you're shopping and you're buying groceries, you can definitely see that the cost of everything is continuously going up. But when you take a step back and you look at the macro, you have to start asking yourself, if interest rates currently are sitting at 0% for the Fed funds rate, if you're looking at the government debt, currently our total debt is $28 trillion. When you look at our actual debt and our deficits, for the fact that the government is spending $7 trillion on an annual basis, and we're only taking in about $3.5 trillion of tax receipts. So we're running a deficit running in the red of $3 trillion. When you have the Fed injecting literally trillions of dollars into different parts of the financial ecosystem for our country, you have to start asking yourself, if we're doing all of this, what tools will the Fed have if we have more lockdowns? If we decide to go to some type of a war with, let's say, China or Russia? What happens if the housing market begins to deteriorate? Because, see, at this point, we're at a really, really vulnerable state. We have, when you look at our debt to GDP ratio, we are literally at 130%, meaning that we have more debt as a country than our gross domestic product, what our entire economy is worth. So clearly, we are in trouble when you start thinking about those prospects. Now, here's what's insidious about the inflation that we're experiencing, and this is why you really have to be a three-dimensional thinker. Not only does the cost of all of the goods and services that you want cost more today, but the demand is there, but the actual supply, the quantity of the goods are not, because so much of our goods, our supply chain, is based in other regions, mainly in China. Now, I believe that we're going through somewhat of a cold war with China. And if China decides to try to reel in their economy, if we have more lockdowns, then not only will you not have enough goods to go around, but the goods that are going around will cost you more money. That's going to be extremely problematic. Now, we know that the Fed has been utilizing tools like quantitative easing, where they are going into the bond market and they're buying up particular treasuries. And what I believe is happening, and this is just my personal opinion, is that the bond market really isn't filled with investors. The bond market is the Federal Reserve. And I'm going to make my case as to why I believe that right now, that the Fed literally is the bond market. Because when you look at the 2-year, the 10-year, or the 30-year treasury rate, the coupon that they're paying you, the 30-year is paying you around 2%, but inflation is running at 5.4%. So clearly you're holding government debt, but you're not even breaking even because you're losing money to inflation, right? Because there's a 3% premium built in there. So what I believe is happening is that the Fed is going to try to monetize our country's debt through inflation, right? We're creating more currency in circulation, having inflation run hot so that the government can borrow at a fixed rate and be able to pay back that debt. And this is where I believe crypto is going to shine, primarily DeFi. Because if you are a pension fund, if you are an institutional investor, if you are an endowment and you're looking for yield, you're not going to get the yield in the bond market. You're not going to get the yield in T-bills. So this is where now you start looking at some of these DeFi protocols like Ethereum, how you can stake Ethereum and earn 5.4% or 6% on that ETH, if not more. When you look at borrowing and lending protocols like Aave, where you can earn 4%, 5%, 6% on your stable coins. I truly believe this is where DeFi is really going to flourish. And this is the actual first real use case for crypto outside of speculating in terms of mass adoption, because the rates that you can get in crypto, you just cannot get that from traditional finance. And this is why I believe that Ethereum is going to flip Bitcoin, because Bitcoin is just a store of value. Whereas with Ethereum, and when I say Ethereum, Ethereum may have kicked off DeFi, but when I talk about DeFi, I'm talking about Solana. I'm also referring to Terra, other different protocols as well that allow you to borrow and lend and participate in DeFi. And I really believe that you're going to start to see a lot of institutional investors start pouring into these protocols. And I'm going to kind of walk you through some of those protocols as we go forward. I do not believe the Fed can taper. I do not believe that the Fed is going to be able to sell any of these assets, because we carry so much debt as a country. And even dating back to 2008, after the quote unquote Great Recession, the Fed continues to keep increasing its balance sheet, because the Fed is going to be the buyer of last resort. No smart investor is going to buy treasury bills that's paying them 2% if inflation's running at 5%. So this is going to be an actual real bull case for crypto. Now, some of you are asking, is this live? Yes, this is live. Yesterday's live stream was interrupted in the middle of the stream, and then I just decided that I would take it down and redo it, because I believe that this information is extremely important that I'm going to share with you. Dark days are definitely ahead, and you have to make sure that you are preparing yourself both mentally, physically, and economically, and also spiritually for what's to come. For those of you who are thinking ahead, I'm not saying that everything that I state is 1000% accurately going to happen step by step, but for the most part, I've been calling this pretty accurately. So please do me a favor as you come into the live stream. Please like this video, share this video, subscribe, and make sure that you hit the notification bell. In the description below, there will be a link to join my mailing list. Please join my mailing list, because sometimes YouTube does not like to send out my notifications when I am going live. Also, you can follow me on Instagram and shoot me a DM if you would like to dialogue more. If you are someone that's interested in learning about all things crypto, I created My Tech Academy, where we cover everything: how to buy, how to sell, how to store your crypto. We cover different DeFi strategies, yield farming, liquidity mining. We dive into how to structure your portfolio. We have a vibrant community of over 400 students and members inside of the academy that can also help you evolve and grow in this space. We're currently running a coding bootcamp that you can also become a part of. And we have a free 3-day trial. It costs you absolutely nothing to test it out to see if you like it. As long as you cancel it within the first 3 days, it will cost you absolutely nothing. If you like it, you are more than welcome to stick around. So if you can see me clearly and you can hear me clearly, type 1 so that we can get started. Okay, there we go. So I just want to read a few paragraphs and also read some of Jerome Powell's quotes. And then we're also going to play some of the audio. So this article is from the Wall Street Journal. I'm going to share this with you guys in the chat. It says, Fed's Powell concedes anxiety about higher inflation, but resists policy shift. Federal Reserve Chairman, zoom in a little bit. Federal Reserve Chairman Jerome Powell said recent inflation was uncomfortably above the levels the central bank seeks, concluding 2 days of testimony in which he sounded somewhat less confident about the economic outlook and the Fed's policy path than earlier this year. More broad-based price pressures or a weak rebound in the workforce could lead the Fed to conclude it needs to reverse the easy money policies it deployed during the pandemic more rapidly than officials expected a few months ago. This is a quote now. Follow me. This is a quote from Powell. This is a shock going through the system associated with reopening of the economy, and it has driven inflation well above 2%. And of course, we're not comfortable with that, Mr. Powell told the Senate Banking Committee on Thursday. So now, let's unpack that for a second. Let's say that I'm not a finance PhD. I don't know what I'm talking about, right? He's saying out of his own mouth that their target is 2%. So literally every single year, the Fed wants to debase your currency by 2%. That's their inflation target. So when I show you this, and I show you that every year, remember, inflation's much higher than the 2% goal that they're going for. But every single year since 1971 that we've experienced some type of inflation, this is the Federal Reserve Chairman saying that. This is not me being a conspiracy theorist. This is not me trying to give you some Alex Jones, Bilderberg conspiracy. No, this is the Federal Reserve Chairman telling you they want to create inflation about around 2% on an annual basis. Now, you have to think about that and start compounding that. And you can start seeing we had 4%, 3%, 6%, 11% in 74, 9% in 75, 6%. And every single year, inflation is accruing and building. So start thinking about that year after year. So when I show you this image right here, and I show you when the Federal Reserve was created back in 1913, and I show you that the dollar today has the purchasing power of $3.97. Again, this is not a conspiracy theory. This is a fact. When you go to the grocery store, everything costs more today than it did a year ago, than it did 2 years ago. And now, again, they want you to believe that this is transitory and that it's just going to disappear. But as I said to you before, you have to look at the macro and start thinking about, what if we have more lockdowns? What if this variant begins to spiral out of control? What happens if China decides to cool down their economy? We're already having supply chain shortages as it is. So now start thinking about if China decides to keep some of that supply for themselves and start to taper their economy down. You have to start asking yourself what's going to happen then, where we're going to have high inflation, but a low supply of goods and services. That's going to be even more problematic, which is why you need to start getting prepared. There's nothing wrong with preparing yourself. Mr. Powell said pandemic-related bottlenecks and other supply constraints for a small group of goods and services have led to rapid price increases. He said it would be an error to overreact to inflation that results from one-time increases in the prices of certain services, like air travel and hotel rates or goods, like new and used cars that have surged due to the reopening of the economy. Earlier this year, Mr. Powell said he expected inflation would prove transitory because those one-time increases wouldn't continue. But Mr. Powell said Thursday that even though the central bank still expects surge in prices related to bottlenecks to reverse, the Fed was watching to see if other goods and services where price growth has been flat or modest might accelerate as the economy heats up. We've identified, quote, we've identified a half dozen things that look very much like temporary factors that will abate over time. What we don't know is, are there other things coming along to replace them, said Mr. Powell. We won't have to wait a tremendously long time, I don't think, to know whether our basic understanding of this is right. So basically, he's saying he doesn't have an idea or a clue. He's talking out of both sides of his face. On one end, he's saying it's transitory, but then on the other end, he's saying, well, we have to look for some more data, and later on this year, we'll know. Mind you, while you're going to the grocery store, while you're going to the gas pump, while you're paying your rent, The cost of everything is going up around you. But then he's sitting up here saying that, oh, don't worry about it. We just have to get more data. This is why you have to be mindful of these things and understand the mechanics of your economy and your monetary policy and how money operates and works. Inflation is a hidden tax. It is a stealth tax because therefore the dollars that you're working for, they don't go as far as they used to because see, inflation's increasing every single year and compounding. Follow me here. But your paycheck is not increasing to outpace inflation. The way that the system is designed is that inflation benefits asset holders and it punishes savers and workers. If you've been following me on this channel, you would know this because I've been covering this extensively. Going back to look at this, a year ago, wages aren't keeping up with inflation. The Fed prints $2.3 trillion while gold hits a record high. I was talking about that, right? I mean, I've been on this channel talking about the problem with our monetary system. So again, I don't claim to get everything 100% accurate and on the money, but I'm pretty damn close most of the time. Now, when you come here, let's listen to some of the things that he had to say. I think it's better to listen to what he has to say rather than me even reading the article. Hold on real quick.
Inflation has increased notably and will likely remain elevated in coming months before moderating. Inflation has increased notably and will likely remain elevated in coming months before moderating. Inflation is being temporarily boosted by base effects as the sharp pandemic-related price increases from last spring drop out of the 12-month calculation. In addition, strong demand in sectors where production bottlenecks or other supply constraints have limited production has led to especially rapid price increases for some goods and services, which should partially reverse as the effects of the bottlenecks unwind. Prices for services that were hard hit by the pandemic have also jumped in recent months as demand for these services has surged with the reopening of the economy. To avoid sustained periods of unusually low or high inflation, the FOMC monetary policy framework seeks longer-term inflation expectations that are well anchored at 2%, the committee's longer-run inflation objective. Measures of longer-term inflation expectations have moved up from their pandemic lows and are in a range that is broadly consistent with the FOMC's longer-run inflation goal. A big uptick in inflation, bigger than many expected, bigger than certainly than I expected. This is a shock going through the system associated with reopening of the economy, and it's driven inflation well above 2%. And of course, we're not comfortable with that. This particular inflation is just unique in history. We don't have another example of the last time we reopened a $20 trillion economy. One way or the other, we're not going to be going into a period of high inflation for a long period of time because, of course, we have tools to address that. If we see inflation expectations or the path of inflation moving up in a way that's troubling, then we will react appropriately.
Now, again, the Fed is saying that they have tools. And at the end of the day, the only tool that they can basically utilize is raising the Fed funds rate. That's really the only tool. But again, when they do that, that's grossly going to impact funding rates for the government. Because when we come here and we look at the U.S. debt clock, and I want to share this with you because this is important because, see, if we were in normal times where we weren't carrying a lot of debt, where we didn't have a lot of unfunded liabilities, where we weren't spending more than we were taking in terms of tax receipts, then yes, you would be able to raise rates and rein in the inflation, sort of like Paul Volcker did. The problem is you're not going to be able to do that when you have $28 trillion of national debt. When you look at the fact of, second right here, in 1960, the federal debt to GDP ratio was about 52%. When you look at now, the debt to GDP ratio is 130%. So our economy is worth about $20 trillion, give or take a few $1 trillion, but we have $28 trillion of national debt. And when you look at the expenditures, this is really, really important. When you look at Medicare, Medicaid, that's $1.3 trillion. When you look at Social Security, $1.3 trillion. When you look at defense and war. But most importantly, I want you to look at the interest on the debt. We are paying $402 billion right now on the interest on the debt. So now you have to start asking yourself, if interest rates spike, that means that how much you have to pay on that debt is going to increase as well. This is why you're never going to see the Fed raise rates in a sustainable way over a long period of time. Could they move rates to 1% or 2.25% for maybe 1 or 2 quarters? Absolutely. But over the long term, and this is why you have to think out a 3 or 5 years out into the future, there's just no way that the United States can sustain that, because the interest on our debt would be the government's largest expenditure on an annual basis. It just is not going to happen. When you look at the fact that we're spending around $7 trillion and we're only taking in $3.5 trillion of tax receipts. If you were a business operating like that, you'll be operating in the red. Like, you're spending more money than you're taking in. But because we're the reserve currency of the world, we can do this, right? But understand, at a certain point, the rest of the world is going to get tired of watching us abuse the reserve currency status. And that's what I believe is happening with Russia and China. And this is why I believe that they're going to usher in the fourth industrial revolution and definitely lead the 21st century. When you look at our unfunded liabilities, when you look at Social Security, when you look at Medicare liability, right? Our unfunded liabilities is $150 trillion. Like, this is unsustainable on every metric, no matter how you look at it. I don't care if you have a PhD from Harvard, MIT, or you have a 5th grade education. Any person with an ounce of common sense, with an IQ above room temperature, can look at this and say, that's unsustainable. Now, there are only 2 ways that you can deal with this. One way is austerity, where the government actually starts to cut back its spending. Do you believe that that's ever going to happen in the United States? Absolutely not. The other way is through inflation. And this is why I believe this is what's happening, where the bond market is okay with getting 2%, a 2% coupon on a 30-year treasury, while inflation is running at 5.4%, right? That just makes no sense. But what the government's going to do is they're going to allow the Fed to create a lot of inflation, and then they're going to try to raise taxes to try to rein in that excess capital to then try to pay down the debt. The problem is, it's just not going to work, because, again, that's in the perfect world if nothing goes wrong. But again, like I said before, you have to think about all of the external factors that can happen. What if we go into a second lockdown? What if they have to deficit spend more? What if a war begins to happen? What if we have an economic downturn? These are the things that you have to start thinking about. Now, when we talk about the tools that they have in their belt, let's follow this. This is important here, right? Because you have people like Ben Bernanke. And I want to play this for you because, see, at a certain point, if someone keeps getting it wrong, these people are highly educated. They have experience in the banking system. They have experience in politics and government. So clearly, like, they're not incompetent people, but yet they keep getting it wrong. Then one has to draw the conclusion that this is being intentionally done. And if you read books like The Creature from Jekyll Island, if you follow people like Peter Schiff, you would be well aware of a lot of this stuff that they're talking about, even people like Ron Paul as well. So this is Ben Bernanke talking about how they're going to be able to unwind the Fed's balance sheet. This was back in 2008, 2009. And since then, the Fed's balance sheet has continued to increase every single year. So let's listen to it.
Sheet. Is that tax money that the Fed is spending?
It's not tax money. The banks have accounts with the Fed, much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. So it's much more akin, although not exactly the same, but it's much more akin to printing money than it is to borrowing.
You've been printing money.
Well, effectively, and we need to do that because our economy is very weak and inflation is very low. When the economy begins to recover, that'll be the time that we need to unwind those programs, raise interest rates, reduce the money supply, and make sure that we have a recovery that does not involve inflation.
He's not kidding about printing money.
The Fed issues U.S.
So again, this is him talking about inflation being low. Back in, I believe this video's late 2008, 2009, early 2009. And here we are. Has inflation remained low for you? Or does the cost of everything around you continue to keep going up every single year? When we come here to the Federal Reserve's website and we look at the Fed's balance sheet, and we start here in September of 2008, and we watch it grow to $2 trillion. And then we watch it grow here to $2.8 trillion in 2011. And then we watch it grow in 2014 to $4.3 trillion. And then when they start to taper and they start to try to go out here and sell these assets that they're holding on the balance sheet, basically what they're doing is the Fed is printing money out of thin air and buying up government debt. That's effectively what they're doing, which is why when you look at the coupon, the actual interest rate that investors are receiving from these treasuries are so low, because the Fed's stepping in the market and buying particular treasuries, mainly the 2s and the 10s. But then when they started to taper and they started trying to actually sell these treasuries and these mortgage-backed securities that they've been buying into the marketplace, the stock market started to tank immediately, because Wall Street is addicted to cheap money. And Wall Street is addicted to the Fed, basically stepping in the market. And then the government also needs the Fed to monetize the debt as well. So then we had the quote unquote pandemic that happened. And look at this hockey stick approach where literally, boom, the chart just explodes to the point where now the Fed's balance sheet is $8 trillion with no end in sight whatsoever. So when you start looking at these people, they have won Nobel Peace Prizes. These people, they've worked in investment banking, they've worked in government, yet they continuously, year after year, crash after crash, they keep getting it wrong. So one thing my mentor always stresses and emphasizes to me is that history doesn't repeat itself, but it damn sure rhymes. And it's better to follow the path of least resistance. You don't have to overcomplicate things. Something that's in motion is very hard to stop once it gets in motion. The only way you can stop it is either it hits something and stops, or it is knocked off its course. Right now, I have not witnessed nor seen anything that makes me believe that the Fed can rein in inflation, that the government's going to stop spending money. When we look at the squad, AOC, Ilhan Omar, when we look at Joe Biden, when we look at Kamala Harris, when we look at just the things that's going on in this country, I don't see, nor do I hear any of these politicians in a meaningful way talking about trying to rein in spending, make our economy more productive. Instead, what I see them bickering back and forth, arguing back and forth, creating more division, and shipping our jobs overseas and doing more pay to play. Basically, the West is being hollowed out from the inside. And you just have to understand and know these things. Now, highlighting how people like Ben Bernanke, they've been getting it wrong. And the reason why I'm highlighting Ben Bernanke is that he was the former head of the Fed, and then it was Janet Yellen, and then now we have Jerome Powell. But I want you to look at the buildup to the housing crash and how confident he came out and said, like, you don't have anything to worry about. I don't see home prices going down. I don't see us going into a recession. This was in 2005, 2006, 2007. And then we had one of the greatest collapses and recessions in modern history. So let's listen to what he had to say.
Particularly, from the Fed, from all sorts of different places. Can you give us your view as to whether or not there is a housing bubble out there?
Well, unquestionably, housing prices are up quite a bit. I think it's important to note that fundamentals are also very strong. We've got a growing economy, jobs, incomes. We've got very low mortgage rates. We've got demographics supporting housing growth. We've got restricted supply in some places. So it's certainly understandable that the prices would go up some. I don't know whether prices are exactly where they should be, but I think it's fair to say that much of what's happened is supported by the strength of the economy.
Tell me, what is the worst case scenario? So we have so many economists coming on our air and saying, oh, this is a bubble and it's going to burst and this is going to be a real issue for the economy. Some say it could even cause a recession at some point. What is the worst case scenario if, in fact, we were to see prices come down substantially across the country?
Well, I guess I don't buy your premise. It's a pretty unlikely possibility. We've never had a decline in house prices on a nationwide basis. So what I think is more likely is that house prices will slow, maybe stabilize, might slow consumption spending a bit. I don't think it's going to drive the economy too far from its full employment path, though.
So would you agree with Alan Greenspan's comments recently that we've got some areas of the country that are seeing froth, not necessarily a national situation, but certainly froth in some areas?
You can see some types of speculation, investors turning over condos quickly. So those sorts of things you see in some local areas. I'm hopeful that, and I'm confident, in fact, that the bank regulators will pay close attention to the kinds of loans that are being made, making sure that underwriting is done right. But I do think that this is mostly a localized problem and not something that's going to affect the national economy.
This scenario envisions that consumer spending, supported by rising incomes and the recent decline in energy prices.
So I'm not going to play the whole entire video because we know what happened late 2007 going into 2008. We had the Great Recession. But again, these are the people that work in government, work at the Federal Reserve. These are the people these are the minds that are in control of monetary policy. So when Jerome Powell is talking about tapering, reducing how much assets the Fed is buying and trying to reduce their balance sheet and sell some of these assets, you have to say to yourself, if they've been wrong for this long, what makes you think that they're not going to be wrong going forward in the future, right? See, one thing about data that you have to understand, especially with the Fed, is that the data is backwards looking. So you're experiencing the inflation today, right now. They're looking at data going back a year or going back 2 years or going back a quarter. So when you and I are experiencing life, we're not looking backwards. When I go to the gas station to buy gas, I'm experiencing that inflation right then and there. When the government only gives you one stimulus check, right, and then you have to wait a whole year to get another one, you're experiencing that right then and there. So these things are important when you start thinking about it. Now, when you start looking at, well, why would the government want to, have inflation run higher than 2%, but then say that they have the tools? If you come here and you actually just look at the Treasury yield curve and you look at the 2 year, the 2 years basically giving you 0.25%, and then you're getting 1.24% on a 7 year. On the 10 year, you're getting about 1.4. And then if you go down for this was 7.1. If you look here today, it's at 1.31. It went as low as about 1.25. Am I back, guys? Type 1. It looks like I'm good. Okay, so I'm good. I'm back. All right. So as I started off saying, this is why I believe that institutional investors are going to pour heavily into decentralized finance protocols like Aave, like Ethereum, like Solana, and also Terra, because of the yield that you can earn with those particular protocols. Right here, we're looking at the crypto lending rates, and on your DAI with Fulcrum, you can earn 6.76%. With your USDC, you can earn 4.2%, and with your USDT, you can earn 6%, which is far higher than what you can earn with US treasuries. So again, it's a no-brainer. And again, I'm extremely bullish on a lot of these DeFi protocols over Bitcoin, and I believe that eventually they're going to flip Bitcoin because they have more utility, they have more use cases, and institutions are going to want to adopt technology like this because it actually has a real world use case. The only thing you can do with your Bitcoin, because Bitcoin is digital gold, is that you can buy your Bitcoin and you can hold it. If you want to experience DeFi with your Bitcoin, you have to wrap it and then bring it over to an ecosystem like Ethereum. And again, whether it's Ethereum, whether it's Solana, whether it's Cardano, when they eventually get smart contracts, a protocol that can have that type of utility is definitely going to attract a lot of institutional investors. Like, it's an absolute no-brainer that's going to happen. And when you come over here and you look at the CD rates, for example, like when you sit up here, you look at the top national CD rates. For 3 months, you can earn 0.5%. For 6 months, you can earn 0.8%. For 1 year, you can earn 0.8%. For 2 years, 0.9, 1%. And again, another for 4 years, I believe that's another 1.45%, right? So at the end of the day, these are the APYs that you can earn. DeFi just knocks these out of the water. And I'm going to walk you through right now how easy it is to interact with a lot of these DeFi protocols. So give me 1 second. Let me just unlock my wallet and I'll show you exactly what I'm talking about, the power of crypto. So my wallet is open already. So if you come over here to Fulcrum, right, and I refresh this, and I come down here right now on USDC, I can lend my USDC to this particular protocol and I can earn 4%. Now I could come here and, all right, so I have $9,000. Let's do a $5,000. I'm going to lend out 5,000. Right. So let's click lend. And now it's submitting it. And then I'm going to continue the presentation in about like 5 or 10 minutes. I'll come back and we'll start seeing that literally I'll be accruing interest second by second on my fiat, rather than putting my money and locking my money up in government treasuries. This allows me to still stay liquid. And when you start looking at the fact, like even on your Ethereum here with Lido, you can earn 5.4% on your staked ETH and still remain liquid. When you come over here, you come to Curve and you look at the pools, potentially by providing liquidity to these pools, and you start looking at the fact that you can earn 3.66%. You can earn 5% over here by just providing liquidity. And then on top of that, you get additional rewards for being a liquidity provider. So you can earn 2% to 6% in Curve tokens as well. Again, DeFi just gives you so much more utility and so much more yield than you can get from traditional banking and traditional finance. Even when you look over here at Yearn and you come over here, you look at the fact that you can get an 18% APY over here. On your wrapped Bitcoin, you can get 3%. Again, can't get that yield by just holding Bitcoin. On your USDC, you can earn 6% over here. So on Fulcrum, they're paying 4.27%, but over here on Yearn, I can get 6% on my USDC. This is the power of decentralized finance. And this is why, again, I believe that later on this year, we're really going to start to hear about the idea of the quote unquote, the flippening that many people are expecting to happen. You want the link to Curve? I'll give you the link to Curve as well. So, and again, I'm right now, we have our DeFi course in my Tech Academy, and I'm showing you guys some of these different yield farming strategies. So for example, you can stake your ETH on Lido, and then you'll get a staked Ethereum token. So you'll still be able to get your ETH rewards, and then you can take that staked token and you can start participating in yield farming by going over to Curve or coming over here to Yearn and start to stack yield. Now, I'm not going to sit up here and tell you that everything's perfect with DeFi right now. We are early adopters with this technology, which is why we're being rewarded handsomely to be holders of this or to participate in these different DeFi protocols. But there's definitely risks associated, like we witnessed with Bondly the other day, where they were able to, attack them from the inside. We hear about a lot of the flash loan attacks that happens in DeFi all the time. This is why it's important to know what you own and why you own it. Not all DeFi projects are created equal, and it's very, very important that you are doing your due diligence. But again, when you look at the rates that you can get with DeFi on your fiat, and you start coming over here and you start looking at these treasury rates, these coupons that you can earn on your treasuries, it's just a no-brainer for you to focus on decentralized finance. And again, if you read the Goldman Sachs report that I shared inside of the Slack group, you would understand that they definitely have their eyes on DeFi in a major, major way. And I believe that Ethereum is going to get an ETF before Bitcoin gets an ETF, just for the simple fact of, again, there's so much utility when you start thinking about Ethereum. So remember, you heard that here first, that I told you we're going to get an Ethereum ETF before Bitcoin, and Ethereum is going to flip Bitcoin. And I truly, truly believe that you're going to see institutional investors really start to adopt Ethereum in a major way. So people are looking for solutions. They're looking for alternatives. And I'm going to share this video with you that Stanley Druckenmiller basically was talking about almost a year ago, right here. Matter of fact, I think this was a few months ago, not a year ago, excuse me.
It just is amazing to just see it in print from you, and that is when we do lose the status as a world reserve currency, it's going to be hard to find a replacement, because in China, there's a lack of trust in the currency of a foreign dictatorship, obviously, and then Europe's a mess. Your best guess is that a crypto-derived ledger system will be invented, and that will become the reserve currency of the world?
Okay, let's not get too carried away.
I know, but that just sizzles with, sell the steak. Go ahead.
I knew crypto was going to come up in this show. Okay, so it's okay. But look, one of the lines about the dollar we've all heard 100 times the last 10 years is we're the cleanest dirty shirt in the room. There's no alternative. And it's true. That is what has been our strongest case for the dollar. Is Europe is a complete mess. Who's going to trust the Chinese? So it can't be them. And I've been groping, well, how does that resolve itself? Well, you probably don't remember this, Joe, but 5 or 6 years ago, I said that crypto was a solution in search of a problem. And that's why I didn't play crypto the first wave, because we already had the dollar. What do we need crypto for? Well, the problem has been clearly identified. It's Jerome Powell and the rest of the world's central bankers. There's a lack of trust. So sort of groping for an answer for a central case at best guess, and it's hard to make a forecast 3 months from now, much less 15 years from now. I think the most likely replacement would be some kind of ledger system invented by some kids from MIT or Stanford or some other engineering school that hasn't even happened yet, that can replace the dollar worldwide. I don't know what it'll be. I just know if the Fed is forced to monetize the debt, remember, all in the name of raising inflation 30 basis points. I really don't understand why 1.6% inflation with a mandate of price stability is a national tragedy. But okay, if they want to do all this and risk our reserve currency status, risk an asset bubble blowing up, so be it. But I think we ought to at least have a conversation about it.
So clearly, institutional investors like Druckenmiller are definitely looking at this technology and looking at the benefits of this technology. And this is why I keep stressing and reiterating to you, again, people are looking for solutions and alternatives to the dollar being the reserve currency of the world. People are looking for ways to get quick cross-border payments. So that's the business that Ripple was trying to be involved in. But now we have competitors like Telcoin trying to get involved in that space. So clearly this technology will definitely usher in the new digital wave that we are beginning to go through and go into. The Fed wants you to believe that this is transitory, that they have solutions to these problems, that they have tools in their tool belt, but the reality is they just don't. When we start looking at our national debt and you really take a step back and you look at this chart and you make it larger and you just look at this debt, how just year after year it just gets larger and larger and larger and larger and larger and larger, and it just keeps going and going and going and going and going. The public debt is going to get to the point where it's unsustainable. And this is exactly why the Fed cannot raise rates in any meaningful way, because it will definitely impact the debt markets and then the interest that we have to pay on that debt. When you come here and you look at the total debt as a percentage of the gross domestic product, as I said before, we're at about 130% of GDP. That's insane. When we literally, we're at levels not seen since World War II in terms of our debt to GDP ratio, and we're not at war right now. So when you start looking at that from a macro perspective, what bullets does the Fed really have if interest rates are at 0% for the Fed funds rate, if fiscally we can't get our house in order, if we're spending $6 trillion and we're only taking in $3.5 trillion of tax receipts on an annual basis. You just start realizing that we don't really have a lot of tools in the proverbial tool belt to fight and combat inflation, to be able to get our house in order. Now, I just was talking to you about the power of DeFi, decentralized finance. So in the middle of talking to you just now, I was able to create this loan, not a loan, excuse me. I was able to lend out my crypto and now start earning interest on that crypto. I'm earning 4.6% on my USDC. And as you can see, my balance is going up every single second. I'm earning interest on my money in a decentralized way, in a peer-to-peer way, much higher than I can get from any CD, higher than I can get from owning any government debt. That's the power of decentralized finance in a peer-to-peer fashion. No middleman. I didn't have to go to a bank. I don't have to lock my money up. At any moment when I want to be done with this, I can simply click unlend and I'll be done with it. And again, I can start stacking this yield with other protocols. This is the power of DeFi. And these rates are much higher, especially than the traditional financial system can give you. This is why you're going to see mass adoption in terms of the institutional investor really getting involved with this technology because of the yields that they can earn in a decentralized way. That is extremely, extremely powerful when we start looking at just the use cases and utility of this technology. Because you always hear people say, well, what are you using it for? Settlement, transparency, like literally. When you look at the fact that you have the JP Morgan coin, and I covered this the other day, where you have the JP Morgan coin and you have Goldman Sachs issuing treasuries on the blockchain, where now they can get settlement within a matter of seconds as opposed to taking hours to do so. That's the power of this technology. That's one of the use cases of this technology. When you look at the luxury goods maker LVMH, the fact that they're using the blockchain to be able to track their goods and to track counterfeits, because that's the power of this technology, is that I don't have to trust any third party. So I don't have to trust this company that they're giving me legitimate goods, or that they can tell me where these goods are or how much they actually have in stock. I can just pull it up on the blockchain and be able to track it on my own. So I don't have to trust, I can verify. That's the whole motto and use case of this technology, is really creating authentic transparency and removing counterparty risk and middlemen, so that we don't have to listen to Ben Bernanke, or we don't have to listen to Jamie Dimon tell us how much money they have allocated into the derivatives market and what derivatives they hold on their balance sheet. If that was on a public ledger, we can verify that. We would not have to depend on any third party or any auditing firm to be able to tell us that. So there's a ton of different use cases for this technology. Think about the unbanked people throughout the world, because see, many of you, because you and I live here in America and we have Wells Fargo and we have Chase and we have Bank of America, there are regions in the world that they don't have adequate banking, right? There are people who live in rural parts of Africa, right, where there's like no, literally, or in parts of Brazil or parts of China, where they live in rainforests or they live in the woods and there aren't any banks, but they have cell phones. So mobile banking is going to be really, really important. And all you have to do is download a MetaMask wallet, and now you can interact and have a bank account and start earning interest right from your cell phone. So when people say, well, what's the use case of this technology? That's one of the use cases right there. I believe 1.4 billion people don't have a bank account in the world. Well, if you have a cell phone, you download MetaMask, and now you can start earning a yield on your money. And you can have a much more stable form of money, because in certain parts of the world, like in Zimbabwe, they're experiencing hyperinflation. Well, now I can put my money into the USDC stablecoin, or into USDT, or put it into Bitcoin or Ethereum. And now I have a much more stable, quote unquote, currency, as opposed to dealing with my local currency. That's the power of this technology. And I can keep going on and on and on and on of so many different use cases that this technology has. What we do know is that where we currently are as a nation and as a country, we know that this is unsustainable. We know for a fact that the Fed has gotten it wrong, miscalculated the inflation data time and time again. We know for a fact that they've blown up a lot of bubbles, and then when the bubble pops, you, the taxpayer, you have to pick up the pieces and hold the bag. So at a certain point, you have to start looking for solutions. Now, I'm not saying that crypto is perfect in its current state, but there are people that are working on trying to solve these problems. And these problems are only going to get worse as we go forward, because again, we are reaching a point, we've reached that point of no return. This can't end good. And as I said earlier, when you look at the supply chain and the fact that we're already having troubles and bottlenecks, if we go into another lockdown phase, you're still going to have high inflation, but you're going to have less goods and less services. Excuse me. So this is going to be extremely problematic, but there are solutions. And I know that for a fact, crypto would definitely be one of those solutions that I'm looking at. I'm going to look in the chat right now and look at some of the questions that some of you guys are presenting. But as you can see right here, look, I'm earning interest on my USDC as we speak. Very soon, much higher levels than this. What do you think happens if the US also banned cryptocurrencies? That's an interesting, that's an interesting dilemma. I shared a status about how could we refer to Bitcoin as being decentralized if it utilizes a centralized commodity like energy. Once China started to ban Bitcoin mining, look what happened to the price of Bitcoin, look what happened to the hash rate. So one would have to ask themselves, can something like that happen here in America? Absolutely. In terms of banning mining. This is why I believe that proof of stake is a much more dynamic and robust system than proof of work, which Bitcoin utilizes. Now, in terms of banning crypto, yes, the government definitely can ban crypto. They definitely can make it tough in terms of going after the on-ramps, the fiat on-ramps, going after the exchanges. Most people don't take custody of their crypto. Most people don't have ledger devices like this. Most crypto is sitting on exchanges. So as crypto is currently constructed today, if the government wanted to regulate it heavily, they definitely could, and they can do it successfully, because most people are truly lazy and they're not going to do what's necessary to really live in a decentralized world, which is why as I evolve in my thinking, I do not believe that we're ever going to have this complete trustless, decentralized world that we should have, because most people just don't see the need for it, nor do they care for it. I believe that we're going to be more in this like, certain economies will be more centralized in this like vertical integration where we're going to have a central bank digital currency. We'll have a government ledger that controls it, like I said yesterday. And if you do or you say anything that the government doesn't like, they can remove you out of the system. They're going to tell you where you can spend that currency at. Because of the amount of inflation that we're going to start to experience, the hiccups in the economy, because automation is going to take a lot of jobs and technology is deflationary, what's going to happen is that you're going to get like a stipend from the government on a monthly basis. They're calling it universal basic income. And they're going to be able to airdrop that to you directly, like how people get airdropped cryptocurrencies. And then we'll have like some type of social credit score. I think that certain cryptocurrency projects like a Cardano, like an Ethereum, that they have certain aspects that the government may find somewhat friendly, those type of cryptocurrencies will be able to survive. But cryptocurrencies like Monero, they won't be able to survive. Like privacy coins, I can see the government coming after them in a major way. Hopefully the technology continues to improve to a point where people, they won't have to take such drastic measures of having a device like this to be able to properly secure their crypto. But as crypto is currently constructed, I think that the government won't have any trouble trying to regulate it and shutting it down, because it's just people are very lazy. People are not really tech savvy, and they don't really know how to use the technology properly. I used to believe that this couldn't be censored, the technology, but if you know what you're doing, no, it can't be censored. The problem is most people don't know what they're doing, and most people don't care about decentralization. When you look at most people involved in crypto, they only care about their bags pumping. Like when you see garbage like Dogecoin getting to a $74 billion valuation, no one's here for the technology. No one cares about the technology. Like when you sit down and you talk to most people, they only talk about price. So that's going to be one of the major flaws with crypto, because the technology was designed to get rid of middlemen. Yet you have people going into apps like Robinhood and Webull and buying crypto, right? You have people like Pomp, right, who's a Bitcoin maxi and he's promoting BlockFi, right? So you have to start asking yourself these questions, like, you know, what are we really here for, right? Like if you're a Bitcoin maxi but you're promoting something like BlockFi where you're basically giving them custody of your crypto, you definitely start to realize that what we may have gotten involved in this technology for is not why most people are here. Will this technology have an impact on the world? Absolutely. Will this be major? Absolutely. But the idea of it being censorship resistant, with the idea of it being able to withstand governments, no. And this is why I see someone like Charles being a visionary, saying to himself that, you know what, we're not going to be able to get full decentralization, but if we can get a little bit more transparency, if we can make the systems function a little bit better, you know, where we can take this technology and work with governments, then that'll be that. So maybe as the technology improves and we can make the decentralized aspect of this technology more seamless, where people don't really know, like, for example, when you're using the internet, you're interacting with so many different protocols, but you don't see it, you don't feel it, right? It's seamless. Like when I type in ESPN.com, my web browser just renders it. I don't see none of the communication going on in the back end. You know, as of right now today, crypto is very, very clunky, and there's a lot of choke points that the government can definitely get involved in and choke it out. I hope, and this is why I always say to you guys, you have to see a world that doesn't exist. What I hope for is that one day we can get to that point. But as it's currently constructed, we have a long way to go. Post a link to what website? The Ethical Hacker. A Sydney Gish, that's very, very technical. How I'm able to earn money on the way down, I probably in the future, but right now I'm just trying to get some of you guys through the web developer course, right? That the idea of running keeper bots and liquidating vaults and stuff like that is technical stuff that, you know, most of you guys would not be ready for right now. Let's focus on just trying to get us through the coding boot camp, the web developer boot camp, and then eventually we can get the databases and algorithms, and then eventually start working our way up. That's what I want to. Mm-hmm. Mm-hmm. What other questions you have here? Welcome to K's Nation. Of course, crypto can replace the euro. And when I say replace the euro, meaning the physical version of it, the fiat version of it. When they talk about a central bank digital currency, they're basically just talking about a digital version of the fiat currency. And that's what's going to happen. It's not a different monetary system. It's just a digital version of it. But again, you have to look at the macro. What's happening in the United States is happening in all developed nations. If you look at the fact of all of the most developed nations, they're running huge deficits. They have aging populations. So the idea that the West is going to be dominant going forward is just not there. The West got fat and lazy while the rest of the world decided to, you know, work and build its way up. So when you look at the Great Reset Initiative and what they're trying to do, you will own nothing and you will love it. The idea of nation states will no longer exist. We'll have more regional government, and that's what these trade agreements are all about. When you look at a lot of these national trade agreements, they're really like NAFTA and things of that nature. It's really about basically controlling the flow of resources and where resources will go. And this is why you have like the Council on Foreign Relations. you have the IMF, you have these like world body and governing institutions, the WHO. That's what we're going to. We're going to go to more of a one world, one government system. So, but in the meantime, this technology is going to flourish because there's a lot of speculation. We're in the .com bubble. This is our real estate bubble. This is our .com bubble for those of us that are participating in it. But you know, the vision that I brought into this idea of like, you know, overthrowing governments and freedom to the world, it's just not, you know, as it's currently constructed, it's not there. Doesn't mean it can't happen in the future, but as currently constructed today, there's a lot of bottlenecks where governments can definitely make it very difficult for crypto. Leaving funds on exchanges are foolish. Here in Canada, Quadriga took lots of money from people since the CEO died in India. Get those cold wallets up. Absolutely. Binance right now, they're having a lot of trouble in their organization. Banking institutions are no longer allowing you to be able to send fiat to Binance. There's a lot of people within their corporate structure stepping away. You're starting to see regulators starting to close in. Binance they're raising the withdrawal limits. Whenever you start seeing stuff like that, where there is smoke, there's definitely fire. I've been in crypto long enough to tell you that. I remember when Mt. Gox went down. I remember when Bitfinex got hacked. I've watched this happen time and time again. You have to be very, very mindful as to what you do with your crypto, because you have to start thinking about fractional reserve crypto, like how banks basically take your money and they don't keep it deposits on hand. If everyone went to the bank at one time and tried to take out their money, the bank wouldn't have it, right? Because the bank is constantly lending out your money and doing other stuff with your money. It's the same thing with crypto. You know, you may have ones and zeros moving on your computer screen. That doesn't mean that when you go to withdraw it, that Binance has the crypto on hand to give to you. Again, I'm not saying that that's what's going on, but these are the rumors that's out there. And one thing about crypto, where there is smoke, there's definitely fire. I personally would not be leaving any crypto on an exchange like Binance. Now, this is not talking about the Binance projects, the Binance Smart Chain, the BNB token. I'm simply talking about the corporate structure. Now, it could happen in 3 months. It could happen in 3 days. It can happen in 3 years. We don't know. One thing about Ponzi schemes and scams is you really just never know when the rubber meets the road, right? It can happen because of some external event. But again, I don't have time to play with my crypto. I don't know what I do with my top. Oh, wow. I feel like I dodged a bullet. Yeah, I mean, when you have decentralized exchanges like Uniswap, when you have Balancer, when you have a PowerSwap, et cetera, I don't really see the need for leaving your crypto on those exchanges. But again, there's a spectrum. For those of you who may not be tech savvy, you may be a little bit older, or you just may feel uncomfortable with a device like this or a desktop wallet. I can see you saying, you know what, I don't really want to do that. I'm gonna leave my crypto on exchange, and there's nothing wrong with that. In terms of like something like a Coinbase, right? But then you have to worry about Coinbase potentially locking your account. Someone shared that with me last night. They were saying that Coinbase is being sued right now because they've locked individual accounts. So the technology was designed to remove middlemen. And I just personally feel like, you know what? I'm responsible. I'm responsible with my passwords. My private keys. I'm responsible with my seed phrases. So I get a device like this, or I have a desktop wallet. And as you can see, look, I've earned a penny in interest since I've been sitting here talking to you guys in a peer-to-peer fashion. No KYC, no AML, meaning I did not have to upload any documentations of who I am. I didn't have to go and, share my fingerprint and my utility bill of myself. Nope, just in a peer-to-peer fashion, interacting directly with a smart contract, I'm able now to start earning yield. And I'm earning 4.26%. all while sitting here talking to you. This is why this technology is superior to traditional finance. So like when people sit up here and say to me, well, I don't see the use case of this. It's like, what the hell do you mean? You don't see the use case and utility in the fact that I can earn yield in a decentralized way and earn a higher yield than I can earn in a traditional financial system. And I'm liquid. At any moment, I can hit unlend and get my money back. And you don't see the utility in that. You don't see the use case in that. You're just a moron if you can't see that. I would say a hardware wallet over a desktop wallet any day. Because see, your hardware wallet, as long as you're connected to the internet, you have the ability for someone to potentially be able to get your funds. Follow me here. Your computer has a very large attack surface because you have applications, you have USB drives, you have speakers, you're opening up emails, you're going to websites, you're downloading videos, all of the things that you're doing. There's so many different ways you can introduce malware into your computer because the attack surface is so large, and the security of those apps, you don't know what type of, how robust their security mechanisms are. So when you just understand that, a hardware wallet could potentially be exploited that way. When you look at this device, this is cold storage, meaning that it's not attached to the internet, right? So therefore, you have a much better way of protecting yourself from malware, from someone getting in your computer and potentially being able to, rewrite your source files and things of that nature and steal your crypto. I will share. I'll share the site. It's called Ledger. Pull it up right now. Make sure that you buy it directly from the Ledger company. Do not buy this on Amazon. I'll share it with you right now. Never buy it on Amazon. Do you know any hardware wallets that supports projects like TEL? If not, I'm leaving it on MetaMask. I currently have my TEL on MetaMask. Boom, 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 boom. Let's go up here. See some of the older questions. If one thing with MetaMask, if they don't, MetaMask, excuse me. One thing with the Ledger hardware wallet is eventually they'll get the proper integration for you to have a wallet. Just be a little bit patient. If you have projects like Harmony or Telcoin and you don't see the particular wallet there for you to be able to store your crypto there, in a week or two or a month or two, it'll be there. Just be a little patient. Right, you have to understand, like, a lot of these projects, sometimes they're just not supported right now, but that doesn't mean that they won't be supported in the future. Just be patient sometimes. What other questions we see here? Binance locked my account 3 months for 3 months. Yeah, a lot of people are saying that their Coinbase accounts were locked. Because see, what you don't want to do is you don't want to rush people to develop wallet functionality for you, and then you put your crypto there and there's a problem. Yeah, definitely. I try to do my best to just give you guys, I wouldn't even say financial advice because I'm not a financial advisor, or not even just life advice, really just kind of walking you through what I'm doing, right? These are the things that's worked for me. And again, just check my track record. I don't always get it correct. No one's going to be 100% correct, but for the most part, I have a pretty good track record. And I share with you why I think what I'm thinking and the sources where I'm getting information from. Would it be too much to ask you for you to pin these links in the thumbnail after the broadcast ends? Yeah, I can pin those. I can pin it in the comment section, Malik. And if you're in the academy, you should know about all this stuff. We share all of this stuff inside of the group. You know, some of you guys are very, very advanced in the group. Like this stuff I'm showing right now. This is like introductory level stuff. This is basic stuff. Many of you, you're staking your Matic, your Polygon tokens. You're staking your Polkadot project, your dots. So that's good. Brent Scott, I mean, everyone that I know that's a hacker is a coder. I mean, I believe from my perspective, I believe both of them are interchangeable. Although the hackers I've met, they've been people that know how to code. I haven't heard of any non-coders that don't. Maybe if like you're a security, like if you're a security expert, right? Like if you're into cybersecurity, maybe you may know how like vulnerabilities and like hardware and stuff like that. But I'm just saying most of the hackers I know, they were coders that I've ever come across. And then don't forget, like there are white hat hackers and attackers, and then there's black hat attackers and hackers. So like, for example, a white hat hacker or a quote unquote attacker, there are people who like they'll basically test the strength of your security in your network. Like you may have a bug bounty to look for any like bugs in your code. You know, they may try to do penetration tests to basically breach your defenses and breach your network. That's ethical hacking, right? Where like basically people will pay you. Like right now, the government has a bounty out on Monero. If you can break Monero, they'll pay you, I believe, $650,000. I've heard some rumors that they increased it to $1 million. Like that's white hat hacking. And then like you have like black hat hacking. That's like when people like basically are doing like ransomware, you know, and like breaking into, you know, corporate databases and holding people's identities hostage. So the ethical hacker says, I know how to code, but not every hacker knows how to code, especially other ones. Yeah, I'm just saying for me, the people who I've come across that are hackers, they've all been coders, right? I haven't met anyone that like knows how to like hack things and they don't know how to code. Like that's just me. But think about it, like I've been in mainly coding environments, right? Like I haven't really been in like cybersecurity environments. I've mainly been around people that code. So that's why I would know that and think that is because that's the experience that I've had. Mm-hmm. Mm-hmm. I don't really know too much about what Richard is doing with Postchain. I tried to watch some of his streams. As I said yesterday, Richard is one of the best minds in crypto. Period. He's up there with Andreas Antonopoulos. He's a visionary. He's very, very bright because he understands business and he understands human psychology and markets. I think like I was saying yesterday about people like Charles. You know, one of the problems with Cardano and someone like Charles Hoskinson is that he believes in doing things the academic way, where like you have to create a paper and then you have to, you know, have it peer reviewed by your peers and then eventually prove something. Where and the problem with that is that it's very corporate like. So it sucks a lot of innovation out of the system, right? When you look at Ethereum has the mindset of we're just going to break things and throw a whole bunch of stuff at the wall and see what sticks, and then we'll merge it together and we'll discard what doesn't. And that type of mentality spurs innovation and creativity at a rapid pace. Whereas the Cardano way, it's very slow, it's very rigorous, and it's very corporate-like. Where therefore it's like you don't really get a lot of innovation out of that type of model. It's it constrains innovation. Like for example, yesterday Charles put up the JED paper. Basically, he said here's a paper that's published that proves we solve nothing. Right? Like we've been working. Here's this paper that proves that we didn't solve anything. He literally said that, like the JED shows that they're working towards getting a concept. So then why publish the paper? Like, let's publish the paper to tell you that, hey, yeah, we worked on this paper that doesn't solve shit. We like at a certain point, like when you look at like what he's doing, he knows how to build a lot of hype. He's very good at articulating himself. He's a really, really bright mind too. He's very, very smart, but he's a bullshit artist, right? Period. Like, there's no getting around it. Now, eventually Cardano may eventually ship, right? But look how much time it took you to ship. You have projects like Avalanche that has smart contracts today. When you look at Solana, smart contracts today. Ethereum, smart contracts today, right now. So, you know, like when you start looking at these things, you just like, you have to just look at it for what it truly is and just start saying to yourself that, you know, right now Cardano is vaporware, period. And when you're using the Haskell programming language, it's going to take time to find developers that know how to program in Haskell. I know so much about technology because all day long I use technology. I sit, I read, I hack, I play around with the technology. I use the kits that they put out. I go on the different live streams. I go to the Ethereum developer community live streams. I go on the Chainlink live streams. There's a Chainlink workshop coming up. I go and I attend different meetups, and you know, I'm in different groups, and I just use technology and I play with technology, and this is how you can start to see, you know, are these transactions really cheap? Is this really a decentralized, you know, protocol? Do they have admin keys that they're eventually going to burn, so they say, right? Like, these are things that you do, right? You just go out here and you use the technology. You embrace yourself and immerse yourself. You embrace the technology and immerse yourself in the technology. You know, but back to, like I said, Richard Hart. He is the creator of Hex. Hex right now, if we look at Hex, we pull it up. I covered this yesterday. Look at, like, look at this. Hex is making all-time highs, ramping in a bull market. I mean, in a bear market right now, or a corrected market. Like, Hex is just pumping, making new all-time highs because Richard understands fundamentals. He understands that no one cares about the technology at this point. It's all about price. You know, that's one of the things that blinded me for a while, was I was really focused on the technology, but then I realized, like, when you see garbage like Shiba and garbage like Dogecoin pumping, you know that people don't give a damn about the technology. They just want their bags to pump. And Richard understands that. Now with Postchain, I don't know too much about it. But I know that for a fact that Richard is very, if you're with Richard, you're in safe hands. That's how I look at it. But, you know, still do your own due diligence, do your own research. A few of you guys commented yesterday that you make some good money because you heard about Hex over here. If you want to be technical, Hex really started the whole DeFi wave, because Richard was the first big influencer really promoting Uniswap in a major way and talking about Tornado Cash, right? So, Richard is by far, like I said, man, you can't go wrong with Richard. I've learned so much from Richard. Just like even during the whole Bitcoin debate, the Bitcoin versus Bitcoin Cash debate, so he's so nuanced in his thinking. A lot of the technical limitations with Bitcoin, because one of the biggest problems with crypto is that you first get introduced to Bitcoin in the Bitcoin maximalist community, and that's like one of the most toxic, most ignorant places you could be, is being in the Bitcoin community. Yes, it's good to get you started, but then they're extremists to the highest degree, and they're some of the biggest fools and some of the biggest crooks. Like the reality of how they call everything a shitcoin, but then you find out that they're launching ERC20 tokens. You have Twitter, you have Jack Dorsey, who's Mr. Bitcoin Maxi, but then they're creating NFTs on top of Ethereum. It's like you have to laugh at the shit you see out of the Bitcoin community. Like, they're the biggest fools and biggest tools that you could ever come across. I don't own any hacks. I just haven't had a chance to get to it. I played around with a little bit of it here and there, but I don't really own it in any serious major way. Like, I dibble and dabble with a lot of different cryptocurrencies. I may have maybe a 2,000-3,000 here, or 5,000 here, but I don't have enough time. Right? There's 8,000 projects. I have to put the time into the things that pays me and my investors, and it's going to benefit my students. I think you get into trouble when you start trying to be in too many different projects at one time. That's how you definitely get into trouble. I just, again, listening to Richard, watching the things that he actually states unfold. Richard's solid. It doesn't get any better than Richard. What's good, bro? All is well. Is it a wrap for my VeChain, haha, or still change 40 cents if the bull market continues? VeChain's a solid project. So if you're talking about like owning VeChain's a solid project. VeChain has major partnerships, making huge inroads in China. I covered this yesterday. If you come here and you look at VeChain right now is at $4.2 billion. Yesterday was at 4.5. The valuation, the market cap. When you come here, you look at the logistics. If you look at the category, like the next closest competitor is Populous, and they're at $87 million, right? There are no real competitors in this space competing with VeChain. VeChain has real world partnerships and real world utility, so you can't go wrong with VeChain at all. I don't like, I like Origin Trail, but VeChain is by far the cream of the crop. So I mean, I had to take profit on it because when you're making millions of dollars in a particular project and you see that 7 figures, you better cash out. Crypto is very, very volatile, but long term, as I said yesterday, and I say all the time, the market cap right now is $1.2 trillion. The global stock market's worth $110 trillion. When you look at the S&P, it's valued at over $30 trillion. We're a baby right now. We're tiny. All of this stuff is going to pump, even garbage like Dogecoin. But in the end, 90 to 95% of these cryptocurrencies will definitely go to zero. They're useless, including garbage like Ripple. I covered that the crypto wondercast earlier. I think Postchain is going to do well. I think anything that Richard is involved in is going to do well because he knows how to market and he understands fundamentals. But see, let's look at the technology, right? And I think that this is really, really important. So all of these forks of Ethereum or these Ethereum competitors, they're utilizing the EVM in some aspect, the Ethereum virtual machine spec, right? So like when you look at Binance Smart Chain, like that's why they're compatible with MetaMask. They're basically trying to, mimic what the Ethereum virtual machine is. If you look at Avalanche, they're trying to do the same thing. They may try to utilize different consensus mechanisms. They may try to increase the gas limit, et cetera, et cetera. But most of them are basing themselves off of the Ethereum virtual machine spec. And right now what we're witnessing is that when you look at the gas limit with Ethereum, like Ethereum, it's limited in terms of its block space. That's it, period. Like you need a new spec. So if you're trying to base yourself off the Ethereum virtual machine and you're trying to make yourself just a little bit faster, you're going to run into the same bottlenecks that Ethereum's having. Like, so for example, when you look at Binance Smart Chain, they're having a lot of problems with like sequencing and ordering their blocks and propagating blocks out to the network. They're constantly having reorgs within their network because, again, the Ethereum virtual machine spec, the way it's currently designed, is not designed to have $100 million $100 million gas limit, right? It's just not. So that's one of the biggest problems that they're having with their blocks. Like there's too many transactions. The blockchain's too fast, and it's hard for all of the nodes to properly be able to sequence and align with each other. So currently, we need a new spec. We need a new design. That's what Ethereum 2.0 is trying to do. So hopefully, I don't know exactly what Richard is trying to do, but if he's forking Ethereum, if he's basing it off of the Geth, the whole Geth code base, then you're going to run into the same problems that Ethereum's having. This is why I laugh when I hear about all of these blockchains that are, bigger, faster, and better, because as soon as they start getting a lot of transactions and a lot of users, they run into the same damn problems that Ethereum's having. That's because the EVM, the way it's currently constructed, it's just not meant for that much throughput right now. This is why we have things like Ethereum 2.0. So I think Postchain will do okay because it's going to probably take some of the load off of the Ethereum network. It's going to probably pump the first, month or two, like Hex is doing right now. So again, I don't know too much about the project, but I'm assuming if it's a fork of Ethereum that they're basing it off the Ethereum virtual machine spec. This is why Gavin, with the Polkadot project, is trying to create something completely different, right? Because we know the limitations of the current Ethereum virtual machine spec. Boom, 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 boom. I pulled up Hex already, AB, the Omnicast. I don't know, did you come in late? But I had Hex up already. Thank you for the hard work. The Academy paid for itself. Laugh out loud. Been holding Polygon since you mentioned it. You mentioned the keys. I wonder if I should get out. I listen. Polygon Matic is definitely going to have some competition going forward in terms of just being a layer 2 scaling solution. You have Optimism, you have Arbitrum. So definitely you're going to run into some competition. Then you have ETH2 getting ready to ship. But remember, like I just said, as long as you're utilizing the Ethereum virtual machine spec, you need as much throughput and scalability as possible. So Matic still has a utility and a use place right now. Again, if you've been in from a lower price, you should be pretty fine. I don't think you should run for the hills right now. But the idea of the multi-sig wallet, we don't know who those 8 signatures belong to. It could be one person that has the ability to do all 8 signatures. It could be 2 people. It could be 3 guys. We don't know. Like, are the signatures and the way that they're implemented, is it really truly decentralized? These are questions you have to ask yourself. And that's one of the biggest problems with crypto. Like even ThorChain was exploited. That's Eric Voorhees and project that they're behind. And ThorChain was just exploited the other day. And they were able to, roll back their chain and make everyone whole. Like they said, that's what they're going to do. So they eventually, but at least one thing about ThorChain, that's Rune, they were transparent with the fact that, like, they're not fully up and running yet. They're in their testing phase. And eventually they plan on burning their private keys. Again, that's you having to trust, right? So one thing that the Bitcoin maxis are correct about is trying to, minimize trust. And one thing I've learned is that when you're dealing with billions of dollars, you can't trust anyone. So something funny will always happen. So I sold my Matic because, again, Matic and VeChain were my biggest winners in this previous bull market. You're looking at 7 figures on the screen. You sell every second, every time and time again. You don't sit there and hold it. Oh, he's rewriting Geth. Okay, cool. Then that's good. But like I said before, many of the people, they're really just using the Go Ethereum code base, so they're running into the same problems. That's why the Binance Smart Chain, like, I laugh at people when they try to tell me that Binance Smart Chain is better than Ethereum, and then now they're having propagation issues when they try to push out their blocks, because effectively what happens is that the miners in the network or the nodes in the network, however you're managing your transactions, you have to organize them, sequence them, and then you have to push that block out to the network. And then the rest of the nodes have to pick it up and then say that that's an accurate version of the truth. The problem is that if you have really, really quick blocks, you're pushing out blocks so quick that they don't have time, the rest of the nodes, to properly sequence and line up. It's latency. And that's one of the biggest problems. So you have to constantly keep having reorgs, and it's just a nightmare. So that's what's happening with the Binance Smart Chain. So, but again, CZ and them, they understand that most people are stupid, right? So like when you're dealing with a lot of stupid people, it's very easy to trick stupid people because they don't know what they don't know, and they don't care to know, right? See, when you're dealing with a stupid person, one of my biggest skills and best skills that I have is that I know what I do know and I know what I don't know. And if it's something I don't know, I know how to find adequate help and experts in that particular field. Stupid people think they know, and they'll sit up here and like try to debate with you about things that they just have no fucking clue what they're talking about. But that's what stupid people do. The sad thing about it is that the internet has given stupid people platforms and loud voices. So this is how like you can have people like, you know, talking about like garbage like Dogecoin. Like when I saw Dogecoin hit a $74 billion valuation, I said, oh my God, like, and I'm watching people who know nothing about crypto, who I told them to buy Bitcoin years ago, or I told them to buy Ethereum years ago, and they didn't buy it. But now they're buying Dogecoin, all because Elon Musk is tweeting about it. Like they don't know what's the utility behind it. And they're not even buying it like in a decentralized way. They're like using Robinhood to do it. Like they have no clue what they're doing. They're only buying it because it's going up. And then boom, they buy that 50 cents, they buy that 60 cents, and boom, it dumps on them. Yet they could have purchased Bitcoin when it was $3,000 when I was telling them about it. They could have got Ethereum when it was $100 and $55. No, I don't want Ethereum. I don't want Ethereum. I don't want Bitcoin. I don't want VeChain. I don't want Matic. I don't want Monero. Give me Dogecoin. This is what happens, right? So, and we know that this is all artificial intelligence that's manipulating these markets. We know that for a fact. Like there's been so many studies in terms of like the stock market with like high frequency trading, bots that scan market sentiment through Twitter. Like there are bots that all they do is they look at what people are tweeting, what symbols they're tweeting, what stocks they're talking about, and they literally can predict, you know, where the retail investor is truly sitting at. So, you know, you just understand, like, you know, what did Forrest Gump say? Stupid is as stupid does. Yeah, Boyce, like you got people like Boyce Watkins talking in this space. See, one thing about me, I don't believe in silencing people. I believe everyone has a right to voice their opinion. It's how you interpret and view that opinion, right? See, anyone should be able to speak. The question is, should you follow that person that's speaking? Should you, you know, hold them in a high regard or a high esteem? So a person like Boyce can get a platform and then he can speak, and the people that's watching him, like, I don't blame himself. I blame the people that would take crypto advice from a Boyce. Like, see, and that's my point about people being stupid. Like, there's no way I would listen to Boyce Watkins when it comes to crypto. Like, I wouldn't listen to Boyce when it comes to politics. I really wouldn't listen to Boyce for anything, honestly. But you know, like, I think Boyce is just a waste of space, to be quite honest with you. But maybe for like entertainment, I would watch Boyce. But like someone like Richard Hart, that's a person that's an authority in the space. That's a person that has experience in this industry. That's a person that has success in this industry. That's a person that's giving you resources that you can go look up and that you can go and review, and better educate yourself. Like an intelligent person would listen to someone like Richard because he's composed when he speaks. He gives you sources when he speaks. Like, that's important. Like, source up. Where are you getting this information from? Like, when I'm speaking to you, yes, I may add my opinion to the facts, though. I'm sharing factual information with you where you can go and, review the sources. So I think that that's one of the biggest problems with the internet now, is that people really just buy into personality. They don't really buy into the information. Like, for example, like the reparations conversation. When I hear Yvette and Tone speaking, I may disagree with certain aspects, but for the most part, they're sound in what they're presenting to you, information wise. Right now, what you take away from that information is just based upon your comprehension level. But you can tell that they're coming to you from an authentic place. They're coming to you from a place of information that you can take and go and do something with. I like that. Right? That's what I want. That's what I want to take away from it. Like, for example, when I look at someone like Jay Morrison, who's always like this week he's trying to be on the cover of a GQ magazine. Next week he's trying to be an activist. This week he wants to be a real estate developer. He wants to be a wholesaler. Now he's talking about life insurance policies, going into the stock market. Then he's talking about financial literacy. Then he has the Black rights voting block. Then he's doing a corner class. Then he's doing couples therapy. It's like he's all over the place. But people buy into that, and you get a platform, and then people say that's what I want to follow. See, me, I like to follow people who are experts in a particular field, or they are, even if they're not an expert, they have a command over that particular field that they're in. That's what I want to listen to. That's who I want to follow. Better off asking a goldfish about crypto, the boys. Yeah. I wouldn't mind. See, like I said earlier, yesterday, know what you own and why you own it. If you own Dogecoin, know that you own it because you believe that it's just going to go up because other dumb people are going to buy it. Don't buy Dogecoin thinking that it has utility because Mark Cuban said you could buy Mavericks tickets with it. You do realize that you can use any cryptocurrency as a medium of exchange. You can exchange any cryptocurrency, right? For real world value. It's just a matter of them setting up the integration, right? So just because you can swap it for something in the real world does not mean it has utility. What problem is Dogecoin trying to solve? What industry is Dogecoin trying to disrupt? So if you own Dogecoin, know that I only own it because I think it's going to pump and I want to make some money. And then I want to take that money and put it into something solid. There's nothing wrong with doing that. Just know it. Know that it's garbage and know that you're playing hot potato with a grenade. Don't try to spin it as it's something else. Yeah, Sydney, just the things you see, man. You just see people like every day they're like trying to reinvent themselves, and they're constantly jumping on, what's trending. I could see if like every now and then you share your opinion about something because you saw something or you witnessed something that you feel deserves your input. But like to jump, like to literally just keep jumping on stuff every single time and time again. Every time something happens in the culture. Now you're talking about, this particular thing and that particular thing. You want to be a couples expert. You want to talk about Kevin Samuels. You want to talk about Lizzo. It's like, just come on. Like, where is this going? What's the point of all of this? It's only a matter of time, Mikkel. A good evening, Eli. Do you see the crypto market bouncing back upwards early fall? May see all-time highs for ETH, Bitcoin before the year's out. Yeah, I covered this yesterday. I believe end of July, beginning of August is that the market's going to start recovering going into the fall. Think about in August, you have EIP 1559 coming out. You have Polkadot Parachains. You have the Alonzo release and launch coming out with Cardano. So you have a lot of bullish news coming out in August for those particular blockchains. I believe that we're going to get some news on an Ethereum ETF sometime in the fall. And then that's going to really kick off the second leg of this bull market, barring we don't have, more lockdowns or something, some type of external shock, right? Because those are things that we just can't model for, right? Like we don't know externally what could happen in the world that could throw everything off. But that's what's going to happen. I believe personally. So I can, like I said, I can see Ethereum testing that $1,700 level. I could see Bitcoin testing that $24,000 level. Maybe even pushing down to 20K. Because that's like a psychological barrier and a point, because we broke above it. That was a previous all-time high, and then we're gonna rip and run. End of the year, I see Ethereum hitting $5,000, Chainlink hitting $100 or more, and I see Bitcoin probably getting to 100K, somewhere in that area. The overall market cap, I see us getting to about $3.5 to $4 trillion. So currently, right now, the market cap's 1.2, basically 1.3. I see us getting to about $3.5, $4 trillion into the year. As I was saying earlier, when you look at the fact that I can come here and I've earned 2 cents by sitting here talking to you. When you look at the fact that institutional investors, they're not earning a yield anywhere, they're definitely going to come over to crypto. And this is why I believe Ethereum, Solana, and blockchains like Terra and Avalanche, they're going to eventually flip Bitcoin, or definitely give Bitcoin a run for its money, because of the utility that they have. No, this is my live from yesterday. I redid it. Garcia Millard. I told myself I was going to redo it because my internet had went out for an extended period of time. My internet went out today, but I was able to get it back. So I could just edit out that little small portion of it. YouTube, I believe yesterday, first it was YouTube, and then my internet went out, and then today it just buffered. My internet was fine. I didn't have any problems. Ethereum Classic is only going to get a bid because miners from the Ethereum chain, what's going to happen is that they're not going to just throw away their mining equipment. We're moving to a proof of stake system where we're going to get rid of mining. So obviously the miners are going to come over and start mining the Ethereum Classic chain. That's the real bull case for Ethereum Classic. I don't really hear too much about like people developing and building anything major on top of Ethereum Classic. I base my calculations off of centralized valuations, centralized corporations or companies' market caps. So, for example, when we look at something like gold, right? Gold has a $10 to $12 trillion market cap globally. So, if Bitcoin's trying to be digital gold, I believe that Bitcoin can take at least close to half of gold's overall market cap. That puts Bitcoin somewhere at a $4 trillion valuation, right? So Bitcoin right now is at, let's see, Bitcoin's at basically $600 billion. You double the price, that puts you at 60. That's 1.2. 2.4 is 120. Yeah, so you're looking at about probably $250,000 Bitcoin. Like, I don't believe Bitcoin's ever going to hit $1 million, but I could see Bitcoin probably getting to about, 200,000, 250K. That's how I base my valuation. When I look at something like Uniswap, I say to myself, okay, Uniswap's a decentralized exchange. It's competing with Coinbase in the Coinbase space. Right now, it has a $9 billion valuation. Coinbase was able to get as high as $100 billion. Uniswap can probably get to about $40-50 billion valuation, somewhere in that range. So I always focus on market caps and just look at centralized companies, and I look at what the cryptocurrency is trying to disrupt, and I say to myself, can this cryptocurrency potentially get there? So that's like my best case scenario goal at the end. Stuff like Chainlink, you can't really put a valuation on it, and that's why Chainlink is so bullish. I'm so bullish on Chainlink because it disrupts so many different industries, right? So like when I see Chainlink at $6.7 billion, I say to myself, like, the sky's the limit for Chainlink. Like, because it's essential for any type of blockchain. You can use it for any blockchain. It's not just, you know, relegated to the Ethereum ecosystem. You can use Chainlink for data. Polkadot's using it, right? Any blockchain could utilize a Chainlink and decentralized oracles. Staking is eventually coming to Chainlink. When you think about data, data is everywhere. Like, you know, when you like my video, that's data. When you comment on my video, that's data. The weather is data, right? How long I have these lights on, it's data. How long does it take to ship this, you know, this green screen from the warehouse to where I am? That's data that someone would want to access and use to potentially build an application. Like, data is the oil of our generation, right? Because there's so many different data points that you want to be able to know where consumers are and what they're interacting with. So that's why I'm so big on like the graph token and projects like Chainlink, because I understand that data is digital oil and it's so valuable. And being able to get data into smart contracts and being able to trigger those smart contracts in a decentralized way, right, or in a trust mitigated way, is extremely important. Young boy never sell low again says, bro, I work as a data analyst. I can confirm that data is the oil of today. Yes, 100%. So that's why, like, people say, why am I so bullish on Chainlink? It's like, why not? Right? Like literally, Chainlink is feeding data into smart contracts and into blockchains. So now when we start thinking about oracles and how important they are, and then start looking at the competitors, like there's nothing nowhere near close to Chainlink right now. I start looking at the Pith network. I hear a lot of hype behind them, but I got, again, hype. I want to see, you know, what type of technology do they have that makes them superior to Chainlink? Yeah, well, remember, that's the whole purpose of, you know, Chainlink oracles are basically aggregating useful data that people would want to pay for and use, and making sure it's accurate data. I like what AB says. Alonzo is not coming this year. Sorry. I believe that Charles is going to launch Alonzo sometime in August. If Charles and Cardano, if they do not launch Alonzo in August, I don't see how you're going to be able to defend them at this point. I hope for Cardano's sake that they launch and everything runs smoothly in August, because all of these papers that they've written, all of the hype that the Cardano people were out here spewing, if this would just be the biggest slap in their face. Because remember, Alonzo was supposed to launch in March. You were supposed to get smart contracts in March. They pushed it back to August. Listen, there's no way that Charles will be able to sell that to the market, that they had to have another delay. No way. Jeep Man, I sent out the email. I posted it on Instagram. So, you know, I put it everywhere. I told you guys last night I was going to redo it again today. So hopefully one of those notifications you should have been able to receive between last night, me saying I was going to go live today, me putting it on Instagram, me emailing out in YouTube. One of those notifications should have hit you. I can't believe Big Brother's censoring me that bad. Don't tell me they're censoring me that bad. How's it going, Billy Laser? I'm about to hop off soon. I'm going 2 hours flat. I'm at 1 hour and 51 minutes. So I did 3 hours yesterday. I'll do 2 hours today. I did a hour live stream on Instagram yesterday. I've been giving you guys a lot of content, man. On Sunday in the academy, you guys got me for another 2 hours, all about the community. I'm going to really dive into like how to really like look at smart contracts, or how to go and find who audited the smart contract so that you can know whether or not they're credible people. Then we'll do our Q&A stuff. Tomorrow I'm releasing some more yield farming strategies for the DeFi course. Listen, I've been pumping a lot. I've been working hard, man. I've been working hard. More coding content will be released on Monday. Just listen, I've been working. Working. I believe Richard Hart is 100% wrong when it comes to Bitcoin hitting 10K. It's just not going to happen at all. Maybe like on an exchange, a flash crash might happen. But in terms of like across the board, Bitcoin hitting 10K, no, he's wrong about that. Richard Hart has been wrong about price before multiple times. He'll be wrong. He'll be wrong about that. I don't really listen to Richard Hart when it comes to price predictions. I listen to Richard Hart more. I focus more on Richard Hart when he talks about the technology. I think that, and just really about psychology around markets and people. I think that that's where Richard really, thrives when it comes to his predictions and price points and stuff like that. Like, that's just, you have to put a little bit of gamesmanship and salesmanship into when you're speaking, right? I don't have enough time to do that because we're getting ready to wrap it up right now, Jeep Man ones, but I can definitely do it during the next live stream. Thank you for the donation, Jeremy Allen. Don't know if you want to say anything, but I'll definitely cover it next live stream. We're definitely getting ready to wrap it up. So, yeah, with Richard, just learn how to eat the meat, spit out the bones. I think you're going to get more good from Richard than bad. Any more crypto questions? I think I've answered all of the donation questions for everyone that donated. I think I answered almost all questions. Yeah. So, we could definitely wrap it up here. Thank you for tuning in, guys. Please do me a favor and like this, share this, subscribe, hit the notification bell. Make sure that you